Oded Salomy, and we will connect with him right now for his speech on breakthroughs and innovation in the global payments industry. Where does a digital currency stand?
Quite a pleasure to be here. Unfortunate that it's virtual. Maybe next time we'll be able to attend in person. Thank you very much for giving us the opportunity to participate in this global meeting. My name is Oded Salomy. As was mentioned, I'm the Chief Payments Regulator in the State of Israel. There are many people who are regulators of payments, not only in Israel, but in multiple markets. It seems to be one of the features of payments that it is multidisciplinary. I was requested to put together a presentation about innovations and trends in payments with a focus on digital currencies. Okay, so breakthroughs and innovation in the global payments industry. Where does digital currency stand? I'd like to begin by making what may be an obvious point to some of us, and that is that digital payments are actually the most common form of payment in most markets, and that the payment in paper format has not disappeared. It will probably not disappear anytime soon, but it is no longer anywhere near being the only way we pay. If we divide digital payments into three categories, I would think about it the way we have it here on the screen, at least conceptually. So first we have account-to-account payments, moving money from one bank account to another with, I would say, four subcategories: RTGS payments, wire transfers using the ACH clearinghouse, faster payments, or what's known as immediate payments in some markets, and even checks, also known as e-checks, have become digitized in many markets. The second category would be payment cards or credentials, because many of them are no longer physical cards, and that tends to be quite large in retail payments. So in that space, we have credit cards, deferred debit cards, such as charge cards in the UK. In Israel, 80% of our cards are deferred debit, immediate debit cards, prepaid cards. Now, while the vast majority of these cards are still physical plastic, the virtual version of payment cards or credentials has been growing significantly, especially during the time of the pandemic over the last year and a half. And then in the third category, we could talk about digital currencies, which also include three subcategories that we'll go into in more detail later, but they are central bank digital currencies, stable coins, and cryptocurrencies, which are issued programmatically. Conceptually, let's bear in mind that every payment method that you see on the screen uses a given payment system, and each payment system is different from the other. And when I say payment system, let's make sure we understand what that means. We'll begin with a simple transaction where a customer comes into a store, a shoe store, let's say, which is a merchant, and purchases a pair of shoes using cash. She gives her banknotes to the cashier. The cashier delivers the shoes. She walks out of the store, and there are no financial intermediaries required. However, when the payment becomes digital, there are multiple financial intermediaries known as payment service providers, or PSPs. Let's use as an example the credit card product, which was issued to the cardholder by a bank or a non-bank issuer. And that entity is the payment service provider that works with the cardholder or with the customer. The merchant, the store, on the other hand, has its payment service provider, which is a merchant acquirer, also known as a credit card processor. Each payment service provider could be a bank. It could be what we call in Israel a credit card company. We have entities that are issuers, issuer processors, and merchant acquirers all in one. It could be a big tech, be it Google, Amazon, Facebook, Apple. It could be a fintech, an early stage or late stage technology company in the financial technology space. But the payment system is all of the rules, norms, technology platforms, financial relationships, fees that take place between or among the payment service providers. There are lots of complexities around these relationships, and they are not only technical or technological. So that payment system, the relationship between the multiple payment service providers, is what we regulate. But in Israel, like in most markets, perhaps all markets, payment systems do not require a license. In fact, there are many payment systems that are small and not regulated. When a payment system becomes large enough that it is critical to the national economy, then we designate it and supervise it. And we have 7 such payment systems that we regulate in Israel, and it's a very similar number in most markets. Interestingly, the vast majority of innovations that we're seeing in digital payments ride the rails of existing payment systems or new iterations of existing payment systems without too much innovation from square one. We don't see too many new payment systems being built from zero. In fact, it's almost none. Let's go clockwise. Buy now, pay later has been a huge space in the last year, huge valuations and lots of companies and initiatives entering this space. However, it rides the rails of card payments, payment systems, and wire transfers, mostly. P2P propositions, mobile wallets, virtual cards, digital checks, faster payments, although in some cases, faster payments were new payment systems that were created. It's evolved to the point now that even that I could think of, I would describe as existing payment systems or new iterations of existing payment systems, and certainly business-to-business propositions. Lots of innovations in each of these categories, yet they are riding the rails of existing payment systems. Some reforms we are leading in Israel, and similar to many other markets, to enable some of these digital payment innovations. I'll just go through them quickly. We launched this year a review of the regulatory structure on how we regulate and supervise financial activity in general and payments specifically. We're doing what we can to remove barriers to entry and make it more convenient and easier and faster for new players to enter our market. We recently launched open banking through APIs. That's something that's been underway for a number of years in Europe, the UK, and the US. And in that category, we include payment initiators. We have a big reform that's about to go live. It's been going on for a few years, called current account switching, which basically means that at a click of a mouse, a customer of a bank could migrate her bank relationship from bank A to bank B, as well as all of the other financial relationships that are required to make the current account work with the financial relationships that she has in place. We recently launched faster payments in Israel. We're a little late to market with that, and we're looking to improve the implementation and volumes on those rails. And we're also a little bit late to migrate to EMV and NFC. Something we've done in the last 2 years. We were late for good reason. We had lots of innovation without it. But since we started the migration, we're close to 70% terminals now being EMV and NFC compliant. In the last year, we've seen 7 digital wallets launch locally, both homegrown as well as international wallets. And we have several others underway, being planned to launch, in fact, by retailers, so non-financial institutions. Reforms that we plan to be leading include migrating our check to complete digital format. We're part of the way there, improving the time and cost of making cross-border payments. Lots of work in that space, both globally and locally. Improving equal access by payment service providers, which are not necessarily banks, to the payment systems. And hopefully in the next 12 months, we will pass our version of the PSD, the Payment Service Directive. So all those things should help drive more innovation in the digital payment space locally. So I was asked to mention a few trends that we're seeing globally in this space. I'm calling out something that may be obvious to many of us, but it's worth noting. The huge valuations that we're seeing, the volumes that are growing, tend to be by fintechs focusing on niche markets, hyper-focused on, for example, B2B cross-border, maybe even in a particular corridor. One example that was given to me by a successful unicorn in Israel was, well, we're trying to provide a solution to the Pakistani freelancers that design logos for small businesses in the Midwest in the United States. What kind of use case is that? How big are those volumes really? Okay, they actually are quite big when we multiply that use case across the world. Yet it is quite a niche market. And what we're seeing is that in each one of the niche markets, there are huge pools of money and transactions. And we have financial technology initiatives that specialize in these narrow use cases, get really good at them, and then improve the user experience and cost. Another example of a niche market are what I'm calling citizens of the world, people who function in multiple jurisdictions with multiple currencies and have financial needs, or small businesses that function in multiple jurisdictions, even though they're not multinationals, they still might want to be able to sell in Europe, the US, and China. How do you service those entities? So a niche space, but with significant volumes. Another big category that we've seen recently are employers trying to provide their employees fintech as a benefit, perhaps advanced financial planning, perhaps lending against future salaries, and more. So another big trend that we're seeing is the unbundling of roles and products in the financial space by both banks and fintechs. If we think about it, historically, one of the barriers to entry to banking was that a bank did so much. The roles that it performed, both technical and technological, analytics, operations, legal compliance, and licensing, each of these is a world of its own. And to be a bank, you needed to do it all. And what we're seeing recently is that each of these roles is being addressed as a space, a standalone space by fintech providers or technology companies, or even in some cases, consultants and experts. And alongside that, we are seeing an unbundling of products and services. So on the right side of the screen, you see all kinds of products and services in the financial space that used to be performed all in one. And yet now we're seeing a huge fragmentation, literally thousands of companies, each of them providing one or two or three of the items you see on the right. And as a result of this fragmentation, we're seeing new levels of co-opetition or cooperation or collaboration among fintechs who want to provide more than the specific product or service that they're providing, as well as co-opetition and cooperation between banks and fintechs. So a bank may identify that it could use help and could get better and faster at providing a particular product or service by teaming up with the fintech. And we're seeing a lot of those relationships taking place in Israel between the legacy banks and the new fintech companies. But as we think about all this huge level of innovation taking place, we need to bear in mind the business model of the payments industry. If we count the number of transactions that a person or business performs per month in the payments space, it's huge. We make lots of payments all the time, maybe 50, maybe 100, maybe 200 per month. If we count the number of times we perform actions using our current account at the bank, it's a small number, or it's a much smaller number than payments. And if we count the number of times an individual or business engages with a credit product, whether taking out a loan or paying back a loan, it's quite small. That might happen once a month, maybe twice a month. However, if we look at the sources of revenue and profit from each of these spaces, the pyramid flips. financial entities, fintechs, make a lot more money by giving out credit and charging interest than they make by engaging in payments in the payments industry. In fact, payments have become so commoditized that in many places they have become unprofitable or almost unprofitable. So why do it? Why enter payments if you're not going to make a profit? So a main reason for that is that it gives huge levels of customer engagement. If the customer is making payments so many times a month, that gives many opportunities to upsell or cross-sell other financial products, such as credit, or maybe even non-financial products. And it also gives an opportunity to make smarter risk decisions by looking at the data, smart underwriting, and maybe even identifying financial needs where the consumer is not even aware that she has a need. For example, a loan to pay for a vacation if we see that that consumer has purchased a plane ticket. So, digital currencies, a hot topic, an emerging topic. Still the volumes are quite low compared to all the other types of digital payments. But let's think about the categories of digital currencies. We'll have a fireside chat in a few minutes about the Bank of Israel's work with central bank digital currencies. But what are they? They are fiat money. For those who don't know, fiat currency is currency that's stable and issued by a central bank. So examples include the US dollar, the euro, the Israeli shekel. So fiat money that is issued by a central bank or by a sovereign monetary authority digitally. A second category are stable coins. So these are currencies that are issued by a private entity, but are backed 100% by fiat currencies. So the entity issuing the stablecoin should have a reserve of funds equal to or greater than the value of the coins that were issued as stablecoins. And it's a space that we're seeing growing, especially in the last year. And the third type of digital currency are what's known as cryptocurrencies, what we talk about most in our daily lives, reading the newspaper. These are currencies issued programmatically without any intrinsic value linked to, and without being linked to any specific asset. Bitcoin is the best known example of cryptocurrencies. And we often ask ourselves, are cryptocurrencies payment methods? It's confusing because they often have the word coin in them, such as in Bitcoin, and we call them currencies. What do you do with currency? You pay. So are they payment methods? Let's think about what a payment method needs to be before it can be described as a payment method. Well, it needs to be stable. If I have a business, if I'm a merchant, such as that shoe store that we mentioned earlier, and I get paid for my goods or services, I want to make sure the value stays the same or close to the same from day to day. I spend money to buy my inventory, I mark it up, I need to make a profit. If the value of payment that I received drops significantly from one day to the next, I won't feel so comfortable viewing it as a payment method. And cryptocurrencies are quite volatile, so we don't meet that requirement. They also need to be ubiquitous, meaning existing everywhere. A payment method needs to be something that I can use to pay any business. And if it's not any business, then let's at least give a critical mass of businesses. If I can't use that payment method anywhere, how can it be a payment method? Therefore, we don't really think that cryptocurrencies are payment methods. They are actually investment assets. The reason people buy cryptocurrencies, the number one reason by far, there are number 2, 3, and 4 reasons, but they are far behind. The number one reason is to make an investment which will eventually yield a profit. So they may become payment methods eventually, but we think there's quite a long way to go before that happens. One quick last slide about some trends we're seeing in cryptocurrencies. So increasing levels of regulation are causing regulators, judges, and lawyers to become experts in this space. I think that's an opportunity because it may give more legitimacy to some of these cryptocurrencies and may eventually help them become payment methods. Much of the regulation is focusing on anti-money laundering requirements, looking at the source of funds, but not only. There have recently also been some court cases about disagreements and disputes that need to be resolved in this space. And what are people doing with cryptocurrencies? So smart contracts are big. They're basically a series of if-then statements. Let's remember, though, that most cryptocurrencies are implemented on the blockchain, which means, or using distributed ledger technology, which means that the code is immutable. It cannot change. And if there's a mistake in the code, be it deliberate or an honest mistake, it cannot be fixed because it's immutable. And therefore, that creates some vulnerabilities when it comes to smart contracts. Decentralized finance enables complex financial transactions without as many intermediaries or without any intermediaries as we have in the traditional financial space. And artificial intelligence is another place we're seeing strong use cases for cryptocurrencies. So that's a lot of stuff that I covered. Could do a full lecture on any one of those slides. Hope there's something new in there for you. And look forward to our next session on the digital shekel, or the Bank of Israel's work on central bank digital currencies. Thank you for listening.
Thank you, Oded, for that insightful presentation. It was definitely worth waiting for. And I think just like the audience, I cannot wait to hear more about the crypto projects that you're currently having at the Bank of Israel. And therefore, we like to connect with your colleague, Yoav Sofer, advisor to the Deputy Governor of the Bank of Israel as well. We will connect with him remotely for a fireside chat with the both of you.
We're both fully connected now. That's an achievement in this digital world. We thought we'd spend a few minutes with the audience talking about our digital currency project. I've had the privilege of working closely with Yoav on the Israel Central Bank's Bank of Israel's project in this space. I did mention it briefly in my presentation, but Yoav, perhaps you could share with us in more depth. When we say Cbdc, central bank digital currency, what does that mean?
Yeah, sure. Let me just say that I'm really glad to be here today. You had a great talk. I always learn something new when I listen to you, and I'm very happy to share our project with this global audience on this platform. So when we talk about central bank digital currencies, we can actually think about it really briefly this way. You know, we the public have two main means of payment when we want to make a payment. Okay, one is we have cash, central bank issued cash, which is physical. So if I meet you in the same room, I can pay you 100 shekels physically with a note which was minted by the Bank of Israel and is a liability of the Bank of Israel. And we have our bank accounts. Okay, our bank accounts, of course, are digital. Okay, and with them, we can use the money in the bank account to pay with checks or with credit cards or wire transfer or whatever. So we have a physical means of payment, which is issued by the central bank, which is, you know, the safest and most liquid and most immediate means of payment. Okay, if I give you 100 shekels, it's yours immediately. And we have commercial bank money, which is digital, that is sometimes more convenient. I can pay you remotely, for example, but it is not immediate and it is not issued by the central bank. So if we have a central bank digital currency, the public would actually have the safety and reliability and immediacy of central bank issued money, but with all of the convenience of the digital medium, to make it short.
Cool, very interesting. Are we a forerunner in this space? I mean, are other central banks doing this, or are we reinventing the wheel? Can you say a few words about the global perspective?
I was going to say, unfortunately, no, we are not forerunners, but I actually think this is very fortunate because this is something really big, and we in Israel would really want to see what other countries are doing as we're thinking about our own project. But to answer that more specifically, let me share a slide if I can. Second. You can see that, right?
Yes.
Okay. So, okay, actually, more and more central banks are engaged in CBDCs. We have data from the BIS, which is surveying central banks every year on this topic. We can see that more and more central banks are working on the topic, both for the retail and the wholesale sphere. We haven't touched on that. We won't have time to do that today. And they're doing a lot of trials and proof of concepts and etc. And when you ask central banks how reasonable it is, they think that they will be issuing a CBDC in the near future. So it's important to emphasize that no developed country, as opposed to several developing countries, but no developed country has yet made a decision and announced a decision that it will launch a CBDC. However, every year, more and more central banks are seeing it more probable that they will be launching a retail CBDC, whether in the short or in the more immediate terms of up to 6 years. So we're definitely part of a big pool of central banks working on this topic, which is actually a good thing, I think. It's actually interesting so I showed the statistics, but it's interesting to take some quotes from the major central banks, which are obviously in a leading position. So interestingly, that the Federal Reserve is kind of cautious, and Chair Powell has said that it's actually more important to be right than to be first on this. President Lagarde of the ECB seems a bit more enthusiastic, and they have actually launched a 2-year project in which they will be assessing whether to launch a CBDC or not, the digital euro. And the BIS, which is kind of the parent organization of central banks, actually thinks that the time has come and it's important that central banks start working on this. So a very vibrant global sphere on this.
Yeah, so absolutely a global trend. I don't know who caught it, but it's over 85 central banks already doing something in this space.
Right.
So let me ask you a question. I talked about some of the really cool things that are happening in payments and digital innovation, and we have lots of very stable payment systems domestically, and we see this worldwide. Why do we even need a central bank digital currency in Israel or elsewhere?
I think that's a good question, and this is exactly the question that we are asking ourselves. I think, circumstances can be different in each jurisdiction, and each country would need to make its own decision. But we are really sincerely asking ourselves this question. And not only, as you said, that we have a very developed and developing payment system, which is, I think, serving us well, serving the citizens well. We should also remember, did I lost my sharing?
You did.
I don't know why that happened. So let me try that again.
It's back.
Okay. We should also remember that CBDC doesn't come without risks. Okay. The main risk, which has been studied very thoroughly in the literature, is the risk of bank disintermediation. The money that we keep in our current account in banks is actually used by the banks to provide credit and liquidity to the economy. So if people prefer to put their money with the central bank digital currency as opposed to with the commercial banks, that could have some significant implications. There could also be implications on the monetary policy and the monetary transmission. There could also be some operational risks, cyber risks, risk to privacy, and not less importantly, a risk of the reputation of the central bank if we mess this up and we don't do this correctly. And the reputation of the central bank is something very important, not only for central bank staff and management, but also for the economy as a whole. So going back to your question, do we actually need this? We published a report last May, and we did a lot of work prior to that, trying to establish what could be the possible motivations for Israel to launch a CBDC. And we actually came up with 6 main motivations. I should stay up from the start. I personally, at least, don't think that any specific one of them is a significant enough motivation for Israel to launch such a significant reform, but it may very well be that all of them together might actually pose the critical mass that is needed for us to decide to launch a digital shekel in the future. But we'll have to see about that. So very briefly to list those motivations. First is alternative and competition. Okay, we know that cash is actually providing a competitive pressure towards the existing financial system because, if the credit card system, for example, doesn't serve you well, you could always go to cash and it's an alternative. And you may want to preserve this alternative also in the digital world. Okay, so that I can pay you remotely with with central bank digital money, not only physically if we're in the same room. We also need to provide an alternative to private means of payment. You discussed cryptocurrencies, which are not yet posing a threat to the payment system, but stablecoins or any other initiatives that are issued by private, local, or global institutions might actually risk the existing financial system. And we may want to provide the digital and the technology and the innovation in the digital money by the central bank digital currency. That brings me to our next motivation, which is actually innovation. We know that cryptocurrency brought the topic of smart contracts and programmable money and things like that. These are currently mainly used within the crypto society, but it would be very interesting to understand if smart contracts and programmable money could actually be used by households and by small businesses, and to make this a significant change for the whole economy. Our third motivation is redundancy. Our system, which you're in charge of, has been very stable, touch wood, and is, we haven't had any significant malfunctions. However, redundancy, and I think especially in the case of Israel, an emergency preparedness is always something in focus. So if we build our Cbdc as a separate system, or as separately as possible from the existing payment system, we might actually be providing redundancy and resilience to the infrastructure as a whole. Cross-border payments, you mentioned them as well. They are currently very inefficient and expensive. Sorry, and there's a work around the world to see how to streamline those and to make them more accessible to all and cheaper and more efficient. It may be the case that Cbdc would be the infrastructure that the global discussion would lead to as what the infrastructure for cross-border payments in the future. And if that would be the case, Israel would also want, of course, to be on that train. Israelis travel a lot and buy online a lot, and cross-border payments are significant for us. Another topic is privacy. Cash, for better or for worse, allows us to pay privately. Okay. Now, of course, we don't want to maintain the worst part. We would not want to issue a completely anonymous means of payment like cash. But you may want to be able to preserve a person's ability to enter, a grocery store and buy himself whatever, without his financial institution knowing where he bought and what he bought. Okay, that may be a right that people may want to preserve. Maybe not. Maybe I'm happy for my financial institution to know about my consumption habits and provide me, commercial offers. But maybe I want to have the right to be able to continue to pay privately, also in the digital sphere, not only if I can enter a store with cash. So this would be something we would have to think about. And the last point is actually rather significant, rather exclusive for Israel. Actually, many of the countries that entered the Cbdc discussion were doing this because cash was disappearing in their countries, and they were asking themselves whether they need to provide a digital means of payment of the central bank in lieu of the disappearance of cash. Cash is still relatively king in many parts of society in Israel, and the government has a policy to reduce the use of cash in order to struggle the underground economy. And we think that if we do the Cbdc properly, to be catered also for the non-technological savvy parts of population, we may be able to support this goal as well. So lots of motivations, and we're exploring all of them.
Very interesting. So I know we're still exploring. We should just say openly that the thinking here is quite complex and takes account of both technology, legal, and payments considerations. I'd like to maybe invite you to say a few words about, what does the Digital Shekel project look like at the Bank of Israel? What have we done?
Right.
What do we
plan
to do?
It's important to emphasize that, it's not actually really, projects usually have like a starting date, a timeline, and an end date. Okay. And as I said, we haven't made a decision yet. So what is this project? We're actually building an action plan. We want to be prepared for the point where, if we decide that circumstances are as such that it is time for us to issue a Cbdc, we're prepared, we've done all the analysis. So what are we doing? First of all, we're doing a lot of economic and payments analysis, trying to understand the implications. I mentioned the risk for the banking system, risks to the monetary policy operation, and et cetera. And also, you described earlier all of the developments in our payment system. Will we maybe be risking these developments by actually telling the community that the central bank is entering the arena once again? That's something you need to think about. There are also a lot of legal implications that you need to analyze. We're also evaluating the technologies. CBDCs are often oriented with cryptos. They are not cryptocurrencies, not at all, and you explained that. However, it may be the case that the blockchain technology behind the cryptocurrencies might actually be useful for the construction of CBDCs. So we're looking at that. We actually even did some kind of a POC in the, I'd call it just an experiment in the Ethereum environment. We were trying to study this technology and look at its implications and limitations and benefits. That doesn't mean at all that we will be using Ethereum if we decide to issue a CBDC. It's just, a technological study. And another thing we're doing is we're liaising with stakeholders. Not all of the wisdom regarding this topic is at the Bank of Israel. And it's very important for us to hear the technological industry in Israel, the payments industry, government, academia, economic organizations, and the general public. And this is something we've been doing over the last several months. So we're trying to build, to put us in a situation where, I guess, I don't want to put this timestamp, but at the near future, if we come to a conclusion that it's time to issue a CBDC, we will have been ready.
Outstanding. So if we were thinking about the people in the audience, we know they include a number of entrepreneurs and technology executives. And we also have some people in the audience from Israel, I believe. What do we think entrepreneurs or technology players should be doing in this space?
Right. So in the CBDC space, and maybe you can say later, about opportunities in the payment system in Israel in general. But I think that in the CBDC space, entrepreneurs should be thinking, what would be, first of all, the systems that would be needed to construct a CBDC system. And we know that there are a lot of companies on the race right now trying to suggest, their infrastructures and their technologies for countries to be building CBDC. But I think you also need to think about the innovations and the services that could be used on the CBDC system. Okay, for example, how do you make use of smart contracts for the use of the household and small business? Okay, how could programmable money be supporting the real economy and not just the crypto economy? And countries are at different stages regarding CBDC, but I can even say that not only it might be useful once countries launch, but I think that if governments and central banks actually are exposed to the opportunities that all of these services which would be using CBDC would be bringing to the payment system and to the economy, that could really impact the decisions. So if I was an entrepreneur, I would be trying to think, what would CBDCs look like in 5-10 years, and what I could be offering to this technology in the benefit of the real economy.
Yeah, I think it's fair to say that one of the things we talk about, you and me and the rest of the team here, is what's the business model for the distributors of CBDC? So we know with cash, banks will distribute the cash to the public. It's not necessarily something they like because it has a big operational burden, but they're a bank and it's part of what they are required to do. And they have their business model. If there's a non-bank entity that will be digitally distributing central bank digital currency, how do they make money? And I think what you're saying is they can add value through smart contracts and other things, and perhaps build a business case. And that maybe goes back to the pyramid that I talked about, where, if we expect consumers to be using CBDC many times a month, maybe that could be a platform for further engagement and other upsells. Maybe also just to respond to your question about what fintechs can be doing in Israel. So we do have an aspiration to make the market open and accessible to Israeli and non-Israeli entities that have new offerings and innovations in the payments space. And one of the challenges we have as regulators is that even though Israel has a huge number of unicorns, more unicorns per million people, I think, than anywhere in the world, and out of that group, a huge number of unicorns specifically in the payments space, we have a hard time making Israel as a market attractive because it's not as large as perhaps the UK or the US, and because we'd like to become more attentive to the needs of the technology players. So this is a call out to all of you watching. Please do take a look at the Israel market. It's quite big, and compared to some of the markets, it's not quite big compared to the US and the UK and Germany, for example. And still, it also provides opportunities for engagement with some of the more advanced technology players in the world.
Right. Great.
So I think we've used up our time. Thank you all for listening. We're looking at a screen, but we understand that we're looking at many of you who are watching us. And we certainly hope to be able to engage physically in the not too distant future.
Let's once again thank the organizers for the opportunity to participate.
Absolutely. Thank you for the opportunity. We appreciate it.
Thanks a lot for your speech. And like the audience, I look forward to hear a more practical side of all these projects in the near future. From this more technical presentation, we go to a more practical panel that I have the pleasure to moderate. Before we go to the panel, I would like to ask the people that are standing there, please take a seat. There are plenty of seats left with social distancing if you like. The panel that will take place right now is titled, "What are the opportunities and limits of a cashless society and what to expect within the next 5 years?" Probably topics, questions that we're all asking ourselves. And I'm very glad that I will be here joined by Rik Coeckelbergs, Director Product Marketing Management at PayPal. We also have Sandeep Santori connecting with us remotely. He's the Equity Strategist and Chief Investment Officer of UBS Global Wealth Management. We have Didier Richta, Head of Daily Banking and Payments at Banque Internationale à Luxembourg, and Marta Mgeni-Fischer, Social Entrepreneur, Founder and Chair to the Executive Board of the European Women Payments Network, and a personal friend. So please join us on stage. Or join me on stage. So welcome. Welcome, Sandeep, as well. I'm going to start with the very first question and a personal confession to Rik. 10 years ago, in my naivety, I think I was working 3 years as a professional in the payments industry. I sent an email to your former CEO sharing my vision on payments and why PayPal was the right company to build a platform for all relevant digital payment solutions. Now, what I want to say is that reading back that email made me realize how slow some of these evolutions go. According to you, why does it take so long to go cashless? What are limits, according to you, that prevent us from shifting quickly to a cashless society?
So, once, thanks for having us, and thanks for that email. We're working very hard, but yes, it takes time. I think, you talk about slow. I think, in the past 18 months, it's actually gone very fast. And I think, but overall, cash is still dominant in many countries. And I think one of the reasons that it takes time is because it taps into behavior. And behavior is very much a thing of trust and convenience. And for many people, they trust cash and they find it incredibly convenient. And I think, for all of us here working in this industry, we need to create platforms, solutions that are built on trust, that are secure, and that invite people to try out new ways to pay, to store money, and to sort of organize your financial management. And that's a journey, right? And I think in that journey, we have to provide choice. I think PayPal is often seen as a digital company, but we're not fighting cash. We embrace cash, and we also provide solutions around cash. So it's not about going cashless. I think it's much more about accelerating digital. And let's leave it to the consumer to decide how they want to pay.
All right, thank you. Didier, my next question is for you. Without looking too far into the solutions that will stimulate society going cashless, but as a bank, what would you consider the main opportunities for a cashless society? Why should we take all the effort to change customer behavior towards cashless?
Good morning, everyone. Yes, so the opportunities, I would say, for the bank, the first one is to decrease the risk and the cost of cash. But mainly, as Rik said, it's a question of behavior. So if you create value on digital payment means, then you can accelerate the behavior. So the opportunity here is to switch from, I would say, the cash, which is a bit dry. When you give someone physical money, you cannot add an experience value to it. If you use digital payments, you can add value. For example, when we review all our credit cards, we added purchase protection and online protection. So if your goods are not delivered, you are insured. This you cannot do with cash. So all these added services that you have on digital payments can provide clients more trust, which is needed, the digital payment systems. But also you can create rewards. For example, if you pay with certain type of cards, you have access to a lounge. And I would say in the forthcoming, by mixing digital payments with open banking APIs, you could add other value, because then you can mix services and you can provide, thanks to AI, analysis to your clients, for example, how they spend, where they spend. You can add security for your client. They can manage the digital payment means. They can stop it, block it, suspend it, then activate it again if they trust it again. So they become more, I would say, the actor of the payments. So for me, it's more the opportunity of creating value on the payment means.
Although I can imagine that for many consumers, the main argument for using cash is also anonymity, which are assets that you lose if you grasp those opportunities.
You're right. Thanks, we are in Europe, so you have GDPR, which is protecting a lot the European citizens. And so if you want to use clients' data, you need their consent. So for example, if you want to use data to provide budget analysis, expenses analysis, the client has to opt in. That's not something you can do without the agreement of the client.
No, of
So,
course,
yeah.
of course. Well, Marta, you and I, we know each other for some time. I know that Africa is a continent that you follow up closely, where cash, but also digital, has been a point of discussion for a long time in terms of inclusivity. I also know that diversity is a very important topic for you. Would you consider a cashless society? Do you think that will create a more inclusive and a more diverse society, or do we risk to exclude certain segments of society by pushing too far in going cashless, according to you?
Thank you, Rik, for the question, and thank you for inviting me to be here. I think it's a two-side of a story, because when we look at African markets as an example, it's a very special case. So you cannot really compare it to other European countries or other developed countries. But when we look at Europe as an example, the elderly, the vulnerable, people with mental health, people who are homeless, the move towards a cashless society will create that exclusion. So there will be a lot of digitally and financially excluded people because they won't have access to that. The elderly people have no education to understand, or rather the tech know-how to really make use of the digital experience. So while in a way we are including some people, we're pulling in some people into the ecosystem, we are also creating a new variety, so to speak, of people who are excluded. The vulnerable, the elderly, people who are misplaced because of conflict, because of natural disasters, for example, will also be affected. So I think, apart from it being a human right, as a person, I would like to be able to choose myself. When it comes to inclusion, we are going to create a whole bunch of people who were previously included or could participate, and now because of different aspects of digitization are excluded.
Yeah. All right. Thank you. I'm gonna apologize to the panelists already. I prepared a set of questions, but as I'm getting into the panel, I'm getting more questions in my head. And the first one is for Rik. When we go back to the answer of Marta, this inclusivity is definitely a topic. Is that something PayPal takes at hand, or something that you would consider as responsibility of incumbent banks? We are more looking at the digital customers.
So I think it's a very good question, and I think it's almost at the heart of PayPal to drive inclusivity. And I think how you described that it's excluding some people. It's actually also giving a lot of people access to not only digital payments, but a whole range of financial services that were not accessible before. And if you see the number of people that have access to a mobile phone, for instance, is increasing so fast that actually it's providing a lot of people with access. That doesn't mean to say there are no challenges, right? If you look at the unbanked, it's still 55% of the unbanked to 60% are women, right? So if you talk about gender inequality, we have a lot of work to do, and it's very high on our list. And those that follow PayPal know that we're investing a lot to see if we can bring more gender equality into this space, because I think it's important for society, but also for us as a company to provide that access not only for men but for women in a very equal way. And we know that that needs an extra push, and we're trying to play our part in that push together with United Nations. But it's a long road, right? So it's a journey, and I think we're on that journey with many participants in the ecosystem.
That's very interesting. And of course, as a digital player, that's more an addition on top of what you are providing. Often consumers look at this differently when they look at banks. The incumbents, as we say, they always have been providing this physical access to branches, to ATMs, etc. So if you start going to a more cashless society, you probably get a lot more conflict with customers compared to players like PayPal. So how do you look at this inclusive aspect of the evolution to a cashless world?
So we are trying to accompany, thanks to our physical network, our clients.
Yeah.
So for the elderly and disabled, like Amanda said, they are not paying if they are coming to the counter. So these are exceptions, and that's an agreement that we'll keep going, providing services to, I would say, the less favorable people. For all the other ones, we are trying to, I would say, have a footprint which still serve as a local bank, the whole country in Luxembourg. So even though we are having less branches in the networks or less ATMs, we are still trying to cover the whole country and not to have, I would say, only in big cities and leaving the countryside alone. No, so we are analyzing, for example, where the people are going to shop, or the tank station, or the mall, or highways, because they are connecting, I would say, bridges between the main shopping points or working places. So we try to have this, and also by accompanying people with workshops. So we do some learnings, either digital, they can have, we have campaigns, for example, for the moment, explaining people how to use their digital identity together with LuxTrust. But also we do a physical workshop to help people connect. So in some branches, we have people helping people using their smartphone, enabling their smart app, and being able to do their first transfer with someone side by side. So that's really helping people going forward.
So instead of telling them they have to trust digital solutions, you make them understand that they can trust digital solutions.
Yes, because if you just say, do it once, and then you forget about it.
Absolutely.
If you go along with people, then it changes a lot. They will learn by doing, and if they are confident doing them themselves, then they will repeat the act, and it's a win-win, I would say.
Thank you very much. Sandeep, you are connected with us remotely. I'm glad you're with us. I was initially surprised to have an equity strategist in this panel. Now, actually, it's very interesting to also get your point of view. We hear many doom scenarios despite the rise of digital payments and banking services. FinTech market is told to be overheated, although they keep attracting a lot of capital. What's your point of view when we look at the opportunities for the coming 5 years?
Yeah, thanks, Rik, for the question and also having me in this forum. So I'm happy to share my thoughts on the opportunities in the medium term, but let me also take a step back and address the topic of overeating by looking at both the funding data and also the valuation. So my job is equity strategist. I look at all these fintech companies. So let's look at whether there is really a sign of massive overeating in the fintech space. So last year, the investments in the fintech startups globally was at 44 billion, and it was a very flat year. We all know what happened with COVID-19. But it's coming back very strongly this year. I call this revenge investments. FinTech spending is up very strong in the first 2 quarters based on the data that I track. It's already up 150% year on year in the first 2 quarters, up almost 54 billion in the first 2 quarters. Now, so that exceeds the full year growth that we saw last year. So last year we had 44 billion, and in the first 2 quarters, we had 54 billion. Now, in terms of the regulatory uncertainties that we are seeing in Asia, based in Asia, so clearly the fintech's funding is muted. But if I look at the other parts, US, Europe, even Latin America actually is really seeing a resurgence. I mean, segments-wise, it's not just payments, but also buy now, pay later, SME lending, and across the board, we are seeing a massive surge in investment. So I don't think there is a massive overeating. Basically, it's kind of a pent-up investments that we didn't see last year, so it's kind of coming back. In terms of valuations, when I look at the public listed companies that I follow, I think fintech stocks are up 30% in the past 12 months, up 15 to 20%. That's consistent with what I'm seeing in other parts of technology. So when you look at software or other parts of internet, I think the performance of fintech is consistent with what we are seeing in other technology areas because of the acceleration of many digital trends. So my view is, yes, there are some pockets of overeating, but there is also a lot of pent-up demand post COVID-19, and perhaps we are seeing some of that actually playing out this year. In terms of the next 5 years, I think what we are seeing at UBS is that we are looking strong growth in not just in payments, but also other parts, for example, insurtech, even regtech is an area where we are very excited. And also growth-wise, it's not just US and Asia, which have a first-mover advantage today, but clearly Europe is a standout. And also Latin America is one area where we think disruption will continue.
All right, thank you very much. Now, of course, this rise is supported by a continuous change in history and also an acceleration. Didier, last week at the banking scene, we organized a payments barbecue to get an update on everything that's going on around payments. And one of our speakers was the Director General, Etienne Goosse, of the European Payments Council. And it's actually unbelievable how many different tracks that they're currently working on with banks to make payments more convenient for consumers, maybe. What are, according to you, the most prosperous initiatives, and how can we ensure that your customers don't lag behind the speed of change?
Yes, I will maybe concentrate on two, and the first one for me is the very short-term one. Instant payment has been launched in Europe. It's even heavily pushed in the Digital EU payment initiative. And instant payment allows people to pay from bank account to bank account in less than 10 seconds. But on top of it, payment is guaranteed 24/7. Meaning that today, if you want to pay, paying online or doing a peer-to-peer or a P2B, you still have what we call an SCT, SEPA credit transfers, and you have to wait usually the day after to be sure to get your money. So it means that today it's only a payment cards, PayPal, these kind of solutions. With instant payment or faster payment in the UK, it will break through and change, I think, the way people will pay in the very near future. Why? Because if I have first online, if I need to pay and wait max 10 seconds to have the confirmation of the payment, as a merchant or as a consumer, I can wait 10 seconds in front of my screen. And a peer-to-peer, it's a account-to-account payment. It's free or at a very limited cost, but I would say within the next 2 years, it will be free everywhere. It will be the new norm. So this is, for me, the main change that we will see in Europe. You also have an initiative, which is called European Payment Initiative, where you have I would say, banking groups in Europe trying to build together a new platform, which is based on this instant payment, to have an EU payment system to be in competition with Visa, MasterCard, and other international networks, so to be independent in Europe. So this is, for me, the game changer. And if you add this, then to APIs, to open banking, to fintech environment, you can use these instant payment APIs to create value and to create new ways of paying. This is for me the main game changer, which is very short term, because we've seen in Luxembourg, 2 banks are already alive, a bit more very soon. In France, almost all banks are online. In Germany too, so it's coming, I would say, common within the next 24 months, which is very short term. And as said before by the Central Bank of Israel, the next game changer for me will be the Central European digital currency, the digital euro. There is a strong will of the BCE to go into it. We are hearing dates of 2025, something around there. Of course, there will be pilots, and as they say, it's more consultation for the moment. But then I would say the next one will be the digital euro.
Yeah.
And the risk, as you maybe said, is as Rik said, everything now is maybe mobile based. So the risk is to lose people who are not digital techies enough to follow with their mobile phone. Yeah. That's the risk I see with all the digitalization and the speed going forward for the moment.
All right. As for the digital, the central bank digital currency, we held a virtual roundtable at the end of May with the Director of Payments and Market Infrastructures of the Dutch Central Bank. And when I asked her when will I, as a consumer, be able to consume these digital currencies, they were rather looking at probably within 7 years, not so much within 4. So still some time left to ensure that
it's only pilots for the moment.
Exactly. Rik, PayPal is currently investing in almost every new product developments that we see in payments, whether we look at buy now, pay later, credit cards, merchants, cryptocurrency, it doesn't really matter. You're everywhere. What do you consider the biggest opportunity for the next 5 years for an even more digital payments environment? Let's say the biggest opportunity, the second biggest.
So I can answer that question. I think it does matter, actually, and we spend a lot of time thinking about our next move and what we do next, and much of that relies on a network of partners, because that's the only way we can do the many things that we do. I think for us there is really two big things as we sort of expand beyond what we would call payments. One is financial services. You mentioned buy now, pay later, crypto investments. So we are expanding financial services. And the second one is shopping, right? So I think for us, today you shop and you might have a discount code and a loyalty card, and there is still a lot of work to be done there. And we foresee a world where we can bring all of that together and allow a customer to pay in a store, benefit from a coupon, benefit from rewards without having to think about it, right? Today, that's really at the moment of purchase. And I think if we can crack that code, I think then the next evolution, a little bit longer out, is where we really start to separate the art of buying from paying. So I really foresee a world where you can shop as a consumer with whatever, with a QR code or a physical card or your mobile phone. And then later, when you are back at home, decide, do I want to pay for that now? Do I use the family's current account? Do I split it because I bought a birthday present that I can split with a group of friends? Or do I use buy now, pay later and delay the payment for 30 days or pay in installments? Today, you have to make many of those decisions when you are buying that new washing machine or when you're buying that gift for a friend. And I think in the future, we will see that much more separated over time, where when you are in the store or shopping online, you can enjoy the experience provided by the merchant. And then later in the evening on your couch, or even when you're in the bathroom checking your social, you might be splitting a payment into different installments.
All right, thank you. Magda, my next question is for you. We spoke about the exclusion to some extent already, and people not having mobile is one of the critical elements. But of course, my mother, she has a mobile. She just doesn't know how to properly use it. So maybe it's not just a matter of having access to digital services, but it's also being able to deal with all the change and rapid change that's currently going on. Could you give Didier and Rik a couple of tips to ensure that our cashless society in the near future will be more inclusive and more diverse than ever before?
I think that requires a whole day.
Well,
to
I
talk
give you
about
5 minutes.
Yeah, so I think really simplifying the technology, because take a look at M-Pesa in Kenya. You know, it's the largest fintech in Africa. They just announced 500 million consumers, users, and 500,000 businesses that they use. And the technology behind M-Pesa is very simple: USSD, text messages. You know, anybody, whether educated or not, can use M-Pesa. So it's really helped drive the cashless society and also financial inclusion. A lot of people, what we're seeing with a lot of this innovation, so to speak, in fintech and whatnot, and PayPal and other incumbents and whatnot, they're developing at too fast rate, where these people cannot really understand. The elderly people, like you say, your mother has a telephone, but she can't really be bothered or can't really grasp the whole idea of linking your card to your phone or using anything else. So simplifying innovation is one of them, and coming up with solutions based on the needs of the consumers rather than the needs of the company to grow. A lot of education is needed. So educating people on what the products are for. Do they really need them? Instead of just buying, what are the implications of, for example, buy now, pay later? How much are you going to buy? How is that going to affect your financial situation? And the other thing is really taking into account the young people who are getting into debt because they're spending so much. And we're also going to create a whole bunch of issues later on for the younger people. So it's more of ethical, simplified innovation that will include everybody and just not create a whole group of excluded people. What we say, like, everybody has a mobile phone at the moment, which is true. So mobile phone can help solve some of this problem. But we also think of people who live in remote areas who don't have access to this, don't have access to internet. So even though there's a lot of digitization and whatnot, they can't use the products because they don't even have internet or they don't have electricity and whatnot. So all these things have to be factored in. But the main thing is simplifying, educating the consumers.
All right, thank you. I think that's also one of the good aspects of the pandemic, that we start seeing technology more and more as a means to an end, to the benefit of humankind rather than the benefit of digital services. So yeah, there's a lot going on. I think that's going to be a very important aspect in all the the upcoming developments towards a cashless society, who knows, within 5 years. Sandeep, after hearing this panel, what should fintech companies focus on to grasp the new wave of innovation? In other words, if I have the money, in which fintech companies should I invest?
Sure. I think some great points shared by the panel members here. And also, when we also follow companies in the fintech space, I think one advantage I believe that the fintech companies have today is they can learn a lot from the leaders in other industries. So again, to give you some context, the way we look at fintech penetration today is somewhere around mid-single digits. Now, when I compare that with, let's say, cloud, which is around 15% globally, or even e-commerce, 15 to 20%, and we also can talk about digital advertising, which is a much bigger market. I think fintech leaders can definitely look forward to those companies and try to embrace some of the best practices. And over the past 10, 15 years, following the big companies, the big platform companies, I actually think fintech companies, there are 4 ways how fintech companies can benefit. So first, I believe fintech companies should focus on building platforms, not just products. And they can bring the element of subscriptions whereby they have this repeat business, recurring revenues, and create the network effects and cross-selling. I think Rik mentioned this buy now, pay later. I think it's a very good example of how companies can actually expand beyond their core area. So again, build platforms, not just products. Second, I think fintech companies should not shy away from investing in moonshots or frontier technologies. For example, AR, augmented reality, virtual reality took some time for those platform companies, but now everyone is talking about metaverse. The same may apply for blockchain today. I think blockchain is still maybe a work in progress, but I think if they continue to invest in some of these moonshot technologies, I think fintech companies can be very successful in the medium to long run. Third, I think fintech companies should keep an eye on cost structure. If I look at some of the big tech companies out there, they generate 30 to 40% operating margins. And this is not just because of pricing power. They also manage the costs very well. So I think fintech companies should have that long-term profitability roadmaps. And that's where investing in technologies like AI, big data that can help reduce the costs is one way. I think they can also manage these costs very well in the long run. And last but not the least, focus on capturing some of the frontier markets. We know today the market may be very small in Latin America or Africa, but they should not lose sight of some of these frontier markets. And I think a combination of these four factors, I think, should really help the fintech companies. To answer your question, those companies that are following these characteristics are clearly going to benefit in the long run.
All right, thank you very much. If only I had the money to invest in all those companies. With that, I would like to close this panel. We are slowly running out of time. So thanks a lot for joining us on stage. Please give them a warm applause. And we will now go to a next panel. And for that next panel, I would like to invite our next speakers, including a few friends. Serge Wagener, Vice President and Head of Business Unit Payments of Sperkes. We have Sofian Hemici, Head of Delivery at Bank Raiffeisen. Stijn van Brussel, COO of Payconic. Jonathan Prince, he will be moderating the session. He's a co-founder of Finology. And together, they will talk about the Luxembourg success story from DigiCash to Payconic. Please welcome them all on stage. And they're all here on location.
Working? Oh, thanks. Good morning, ladies and gentlemen, and welcome to ICT Spring. I'm delighted that we were able to have an event after the COVID phase where we were all connected online and doing WebExes and all this awful stuff. To see familiar faces, happy faces, that's great. And I'm delighted also to have these gentlemen on the panel. You'll see that they're true experts around mobile payment, and it's the focus and the topic of today is indeed to talk about one of FinTech success stories in Luxembourg. It's a Luxembourg-made success story, so I'm very proud of that too, and I think we should all be. We're going to be bragging a bit, I have to confess that, but still, we're not going to have the fame just for us. I think we also owe that to all these stakeholders, being the banks, being also Payconic, who've handed over and took over the growth and the scaling of DigiCash for the past 4 years. Before we go to these gentlemen and ask them some questions, because I think this is the most interesting part, it's their testimonial, what the insights they're going to share with us. I would just like to remind you all of what is mobile payment and what it has been in the past 10 years. So if we look at the situation 10 years ago, it was cash and cards were king. Mobile payment was mainly about PayPal and not so big, didn't have much traction. Obviously, people didn't adopt it yet. And then if we look at what is happening today, it's half of the transactions in Luxembourg. And thanks to Thibaut de Barcy and the wonderful work they did with Luxembourg for Finance in this study that they issued a couple of months ago, where you can see that half the payments are driven by mobile today. So this is huge, from almost nothing, at least in Luxembourg, to half the transactions. This is quite an achievement, I believe. Basically, what happened? We started this initiative almost 10 years ago with my business partners and Raoul George, who must be in the room. And the idea then was to join forces with banks rather than compete with them. That was the obvious choice we made at the time. Actually, most of the initiatives 10 years ago were around wallets. So probably more going towards disintermediation and competing with banks. We thought it would be a good idea to try and join forces with banks, work together with them. So Serge, who's the vice president at Spruck, is the representative, the very first bank who joined this initiative, and Sofiane, the latest one, the sixth bank who's joined the ecosystem, and Stein being the representative of Payconic, who've now started taking over all this activity and growing it, scaling it not only in Luxembourg, but also outside Luxembourg. Payconic is also operating in Belgium, in the Netherlands, so it's covering several countries. You can see that there were different milestones here, different banks joining the ecosystem with this specific approach of having an app that is directly connected to the existing bank accounts. So this is very specific compared to the wallet model, where it would be based on card rails. Here we're using CPAC credit transfer. The success of that is shown in this graphic, in this diagram, where you can see that DigiCash is the #1 payment app in Luxembourg. There are currently, or that was in Thibaut's latest study, almost 250,000 users in Luxembourg, and it's by far the #1. But I think that, and I'm going to give you a very recent figure that we saw that happened 2 weeks ago, which will show the traction and the success of this initiative. We hit 2 months ago 1 billion euros processed in Luxembourg. This is massive. This is huge. It is indeed something that can be seen as a big success. So I'm going to join you here. And Serge, maybe the first question, could you share with the audience the reason why the largest retail bank in Luxembourg decided 10 years ago to join this initiative when there were several options on the table?
Good morning. Thanks, Jonathan, for the question. So you mentioned 2012 as a starting point. I still remember, I think it was probably 2 years earlier, or 2010, that some 3 guys from a FinTech came to Spruck at the time, and they said, we want to make a payment solution on a mobile basis for Luxembourg. And we said, okay, that's interesting. We are a large bank. We are very, well, you know how it went from 2002 and 2010, I think. It was not the banks who were driving the payment services. It was actors like PayPal, they had the Fortüberweisung, and as a banks, you were busy with implementing the first payment service directive. I think this was only implemented in most countries in 2009. You had the first harmonizations coming with the SET schemes from the EPC. You were still in trying to put all your services on the web banking, and then some guys came and they wanted you to explain to you that they will come to the market and they will implement a mobile payment solution for the market, and they want to cover the payers as well as the merchants. It was quite interesting. But what you already could see is that the mobile would be really the platform of the future. I think we were at that time, I think you had Ideal in the Netherlands, where they're developing already payments, a new way of dealing with payments. we were working on some, maybe we have heard the name of the My Bank. I think it's very popular in Italy, but it's web-based. It was not a solution for the mobile. And we were reflecting on this, and then I think really the mobile hype really hit. And I think that was really the moment where we said, okay, when we have somebody who has the expertise in developing mobile apps and who has as well, and I think was very important, who has an entrance towards the merchants, because that's something we as a bank, we do not know how a merchant is working on the point of sale, and be it the digital point of sale or the physical point of sale. I think it's we have left that to the cards, to the acquirers. I think, and in Luxembourg, most of the banks they have limited their activities to the issuing services. So this was really, I think, a good opportunity to have somebody external to bring in, and I think they had the confidence of the merchants, not so from the banks, I must say. I think when you sort on banks, you sit off very expensive payment services coming through the cards. I think when we look now, I think it didn't change. I think payments have a cost, and somebody has to pay for it. That's obvious. But they had a very good context to the merchants in Luxembourg, and that helped a lot for defining the functionalities and as well bring this thing further. Because you can, as a bank, tell your people pay with a new device, but if there's no acceptance, I think it's no fun. Huh? That's one thing. Then the other thing, I think we are a small community of banks here. We, on some activities, we work closely together. When you look at the merchants, they want a solution not just for one bank, but for all the banks who are active in the market. Hopefully as well from the banks that are in the larger region, because we have a lot of cross-border traffic here. So it was obvious that we had to bring on board all the other banks. And as the largest retail bank, from the private customers' perspective, we are not the largest, certainly not the largest in the business area. That was not so obvious. I think we have some of the representatives here who, from these banks, and I was really skeptical. What does the largest bank want to do with the fintech? Do they want to own that? Do they want to position themselves in a special way, even take a larger share of this activity? And so I think the first 2 years, it was about every meeting started with, no, we do not want to own this solution. It will be a community solution. It's very important that it will be backed up by all the banks and not just us. And so that was, I think that was one part. And then I think what's really complex as well is the internal infrastructures of the different banks. I think there was huge differences on what different banks could provide. I think that the functionalities on the mobile have to be quite integrated with the back end of the banks as well for payment authorizations, especially when you are used as a bank to have offer payment services, mainly during office hours, especially when you talk about credit transfers and direct debits. For the cards, it's a different business. You have different providers to work on a 24/7, but offering authorizations in 24/7 was not so obvious at the time. We see it now with instant payment. It still is not for many banks. But they are catching up. I'm quite confident. So that was the other friction point, I think, within the community, where the banks had to address this point internally.
I believe you scratched the surface and gave probably two keywords here. Is the idea of building a community which relies and is based on trust for the end users. You're already trusting their bank, and then a payment tool which would be directly distributed by banks. Maybe you gain a bit of trust that way, and it's the idea of building this community, giving them the trust in the tool, in the ecosystem itself. Sofiane, maybe as a representative of the latest bank to have joined, what were the key drivers, the reason and the reasoning behind Raiffeisen joining this type of initiative?
Yes. So we started our transformation journey 2 years ago, and part of this transformation, we are looking to work with fintechs. And mobile payment was a key capabilities for the bank, and we were thinking, okay, should we do it ourselves? Should we partner with a fintech? And when we witnessed the success of Spurcase, ING, and it was definitely the choice to go with Payconic and DigiCash. So we started to meet, we witnessed the expertise, the resource was available. And at the same time, we had a very tight timeline of 6 months, I think you remember. And so with all the knowledge and return of experience, for us was the best to partner with Payconic on this. Yeah.
Thank you. So yeah, basically there's once more, it's a matter of trust, trusting the partners, also witnessing the fact that it's something that 10 years ago wasn't obvious. Spurcase made the choice of partnering with a small startup. Nowadays, that's pretty an obvious choice. It's something that everyone does, and we talk about collaboration between large corporates and large banks, large insurance companies, and smaller players. But it's true that 10 years ago that wasn't probably the standard. Speaking of the evolution, the role of Payconic, Stijn, could you share the reasoning also why Payconic has, first of all, joined the arena of mobile payments? What was the story behind it, and how you're going to make it evolve with your partners that are the banks, but also potential other partners?
Yes, certainly. First of all, thanks for having me here, Jonathan. Our story started with PSD2, like I think most of the gentlemen here faced PSD2 as a bank. Then you look at the threat of disintermediation by third parties, by fintechs coming up. We are also a spin-off of banks, so our shareholders are banks, and we got the mission to actually create a competitor for these PSD2 disintermediators. This is how we started. We started in Belgium in 2014. And then quickly we saw, if you really want to be successful in this market, one market is too small. You have to look elsewhere. And we saw a very successful solution across the borders in Luxembourg and went to talk with you guys, and that's where it started. And just maybe to stress a bit how visionary it was to start talking about this in 2010, 2012. We currently also work for Ideal, the online Dutch payment scheme, which is processing about 1 billion transactions per year. Now, Ideal is web-based. What we're doing for them now is making sure that they transit from being web-based to being mobile-based, because 85% of transactions in Ideal is initiated on a mobile device. So we really have to make sure that everything behind it, the flows, the processes, it's really mobile native. And this is what we're doing with them. A second point on why we were very interested in coming to Luxembourg and partner up with DigiCash is because what is crucial to make this succeed is a very close-knitted ecosystem, good partnership with banks. And I don't think it's a coincidence that in Belgium, Netherlands, and Luxembourg, you have these successful initiatives. And you have DigiCash by Payconic in Luxembourg, you have Bankcontact in Belgium, you have Ideal in the Netherlands. It's because these markets have a long history of collaboration between banks. You will not launch a successful solution if you only launch it from one bank. If we look, for example, in Denmark, where mobile pay was launched by Danske Bank, by one bank, also a very big bank, they very quickly came to the realization that they needed to add other banks to the ecosystem to be really successful. And this is also for us very important. For us, it's also about balancing the local market centricity, where you have to build solutions which are key for merchants and consumers in one market. To give an example, if you look at the invoice use case, which is very big here in Luxembourg, the invoice in Luxembourg is different from the invoicing market in Belgium, so you need to tweak your products a bit for every market. So this is really the local aspect where you have to be close in touch with your banks locally. But another thing which is important for us is in payments, it's all about scale. You need to get that scale, meaning you need to standardize your products as well. You need to create efficiencies, which why for us, it was a logical step to create interoperability. As a Dutch user of Payconic, you can pay a friend in Luxembourg with DigiCash. As a Belgian consumer, you can pay at a Luxembourg merchant. So this is one of the key points, also why we are now starting in a new wave of partnerships. For example, towards merchants, we work with large players like Bpro in order to address a larger base of merchants.
So, conscious of time also, looking forward, what's next for Raiffeisen, for instance, around Payconic by DigiCash, but also in general terms, what is your strategy around payments?
So basically, we clearly want to scale, as has been discussed before. And now we are looking to even connect to the broader ecosystem. So getting closer to merchants. And again, that was part of the choice of Payconic, because we saw there was this desire to extend the ecosystem. So it's going to be definitely to be closer to merchants.
The same question to you, Serge. Looking forward, what will be next?
What will be next, or what is already started, I think it's certainly instant payment. I think instant payment will be a wonderful complement to the mobile payment. I think it will solve many questions we had until now, especially on the finality of the payment, the confirmation of the payment. I think it will be a wonderful tool. It's we are looking forward that all the banks are really quickly joining. And the other one, I think, is request to pay. I think that will bring huge opportunities as well on the point of sale and on all kinds of contexts for payments.
Stijn?
I agree with both points mentioned by Serge. On top of that, I would say, let's focus more on end-to-end customer journeys, a bit less on payments as a silo. This is something that we've been working on really hard within Payconic. For example, we're now looking at how can we also support, besides the IBAN-based payments, the SCT and SCT Inst, how can we also support, for example, the dematerialized meal vouchers? How can we also support that in the app? How can we link loyalty in a better way to payments? Really creating an incentive for consumers to start paying with their mobile rather than using their cash. And besides that, for us, a real challenge also is continuous scaling. So we're now in Benelux, but we're not stopping at Benelux, and we're looking at other initiatives which are taking place to see how we can scale up this business to come to really very big volumes, because it's a volume game.
Yeah, so if I may, one question about that one, because it's true that basically 3-4 countries in Europe where you have this penetration rate above 30% of the population. So Sweden, Denmark, Switzerland, and Luxembourg, basically. These would be the 4 countries. I believe there is also a pan-European initiative where you're or at least talking with these players, with these countries, to build some interoperability between the different solutions there. Is that the way forward?
It is one of the ways forward, indeed. The initiative is called EMSA, the European Mobile Payment System Association, where the domestic mobile payment solutions, which is really a scattered landscape, are getting together and see how can we make this next step? How can we make this a bigger volume business? But you have other initiatives. You have, for example, this mega merger which took place in the Nordics between the Danish, the Norwegian, and the Finnish players. Which is also a game changer there. You have the European Payments Initiative, which is being launched. And so all these initiatives have the potential to really bring mobile payments to higher, let's say, to a different league. And of course, we're happy to be part of all of these.
All right. Once more, conscious of time, I'll just, to wrap up, also explain what will be the future for us, because we're changing roles, and we have in the past 4 years now, but basically the DigiCash Phenology, ex-DigiCash Phenology team is now playing a different role as an IT provider to some of the banks, and this is also one of the trends going towards APIs, obviously, Payconic has an API. It's integrated in different modules. So we are supporting some of the banks, some of the players such as Raiffeisen to provide the app and to focus on the operations around these apps. There are going to be some changes. I believe also the rebranding, it's on its way. So it's going from DigiCash to Payconic steadily, but actively. So there it shows also that it's going to scale from something local to really something global. And I think we're very happy to have been the initiators of that, to have been on board, but to stay also fairly on board and to work with these gentlemen and the different banks. Thank you very much. Do you want to?
Well, I wanted to add maybe one thing. The company is close to 10 years old, but it's not slowing down. In the contrary. Last year, I was in a panel here where I said 1/3 of all the population was using DigiCash. Today, it's half of the population. So we had a 40% increase of active population. We had a 60% overall transaction growth. Especially in online with the COVID situation, we see that 80% growth over 1 year. So it's really accelerating even at this stage.
Thank you for adding that. That I think is very useful also. Thank you very much for your time. And gentlemen, once more, thank you for your contribution. Thank you very much.
Also from my side, thank you very much. It's always fun to hear these how it's made stories. Our next speakers are coming from Sweden, a country often recognized as the first cashless society already. Tom Holgersson is the Director of Innovation, Scale-Up and Expansion at FinTech, Sweden's FinTech hub. In his position, he looks at different ways of creating and building new opportunities for fintechs and other companies to work together across different verticals. He's joined by Victor Lund, Director, Global Projects and Digital Identity at Cbdc. Today, on the occasion of the FinTech Summit, they will explain us the link with digital identity and a cashless society in a session obviously titled Digital Identity as an Enabler for a Cashless World. Please give them a warm applause. The floor is yours.
So I'm very happy to be back here in Luxembourg again. It's been a year since I was here, and I can see things are finally opening up again. And I think most of us here, at least in Europe, are getting our vaccination done. So this session will be divided into two parts to get a bit of context.
It's good to meet you.
First of all, we're going to talk about cashless society, Sweden as a cashless society. We've come quite far when it comes to being cashless. And I know the previous speakers talked about that a bit today, but many of those solutions we already have in Sweden. Secondly, we will talk about the digital identity as an enabler for a cashless society. So to build a cashless society, what do you need? You need a lot of different services. You need a lot of different technologies. And that's sort of like the cornerstones to be able to be cashless. So first, I'm going to interview Victor Lund here from Cashless Society. They are one of the companies behind the Swedish bank idea, which has enabled Sweden to become cashless. My name is Tom Holgersson, as mentioned, and I'm the director of the Swedish FinTech Hub. The hub has been around since 2019, and in Sweden there are around 400 to 450 fintechs. Probably the most well-known is Klarna, but there are also other ones like Tink, and in tech space you probably heard about Spotify. So maybe we should kick off straight away because we don't have a huge amount of time. Can you hear me? Yeah. So, Victor, please tell us a little bit about yourself and about Cashless Society.
Sure. So I come from the space of working with security, cybersecurity's payments, and been within the space for quite some while. Joined Cover Security around 2.5 years ago with the intention to really see where we could drive this company to a new heights. The founder behind the company is the architect behind the Swedish bank ID system that is used by, I think we're up on 99% of the population in Sweden. And well, now that Sweden is becoming cashless, we're really heading into a new age as well, which is quite exciting.
Thank you, Victor. So why do you think Sweden is one of the most cashless societies in the world today? What has enabled that kind of development?
So first and foremost, I think that we started off quite early, and if we really like take a trip down memory lane, we look at companies such as Ericsson building these huge telecom networks. We look at companies such as Assa Abloy, where we use pretty much our key cards if we're going into the hotel. A lot of technology has driven us to where we are today, and a lot of innovation as well. So being a country coming from innovation in that way, we really drive towards something that is more digital, and we've always been doing that as well. And enabling the cashless society is essentially, for us, the bank ID to start off with. It's so adopted and it's so widely used across so many different services, not only within banking, it's also within the space of healthcare. It's so easy for me to check my children's preschool, what's happening over there as well.
Thank you. So what would you say would be, the implications of a cashless society?
Mm-hmm. Yeah, so if we look at governments, there's been a lot of different initiatives around the world of governments trying to really, build these type of digital identity solutions. One of the issues there as well is that they tend to push the population to adopt something. And what we see when we look into the governments and we look into what can actually happen with a digital identity in a cashless society is that we generate a lot of new taxes because people become banked. They go into this type of loop of a circle where there is enablement for digital services to start off with. You can all of a sudden register to anything within a second. There's an enabler for receiving your taxes earlier as well. Digital mailboxes, instant payments, and all those different areas. And getting these taxes from all these digital services, that's also one part that drives innovation in Sweden because it's the reinvestment in the country and the businesses.
So when was the last time you used cash in Sweden?
Maybe 7-8 years ago.
In what context?
Oh, that I can't remember, to be honest. It was so way back. And actually, the last time I went to a branch office was to really onboard with my bank ID again when I had a new phone. That was the last time I went to the branch office. But before that, I haven't been to the bank in maybe 5 years.
Yeah, no, I understand that. But, there are both pros and cons with being a cashless society, as we know. What would you say would be the pros from in a Swedish perspective?
Well, instant payments, these like digital services, there's a lot of different companies popping up in Sweden right now that are basically, they require bank ID. They need it. And it's fundamental for them in order for them to operate as well. And the most interesting parts about the pros there as well that I see is that we reduce fraud. We do not have any robberies of these stores anymore. There's no, in the context to corruption, money under the table, stuff like that, because everything is trackable. And it's trackable in a good way. And well, one of the pros of that, of course, is as well that when receiving all these taxes, I can go tomorrow if I want to and study to be a doctor, and I don't have to pay a single dime for it.
Sounds good.
Yeah.
If you want to be a doctor.
Oh, no.
So what are the big downsides then with being completely cashless?
I don't know what you said, but I think we touched a little bit on the topic before with the previous speakers as well. That it's a struggle, of course, for the elderly and the mentally disabled in that way. But the way that we see it is that it's been going on for quite a long time as well. So it has to be an adoption that goes through different stages of the process. So, of course, there's going to be early adopters to services, digital services, and digital ID. But all in all, you have to keep what is right now for the elderly, the mentally disabled, and everything like that to be able to function. And also, of course, try to infuse the parts that has to do with people that want to adopt to something fast. So it is a transition, of course. And we've been seeing that for the past 12 years in Sweden as well.
Okay. Thanks. You work for Cover Security, and I mean, digital identity is the core of what you do. But if you go into your presentation that you will hold, how would you explain, I mean, to the audience here, why digital identity is an enabler for a cashless society?
So it all starts with the registration processes to banks and everything like that. It's huge, complex issues nowadays. We've seen banks having numbers up towards 120 clicks to open a bank account. And it's about the enablement, of course, to really look into the people that are unidentified, the people that are not financially included, but also ourselves that has a digital trail to really secure that. So this type of network and ecosystem that we're working on, that I'll talk about a little bit in a bit here, is really the fundamental part to go from where we are now to this buzzword that everyone's talking about, decentralization and stuff like that within the self-sovereignty space. So the digital identity itself is the key enabler that I would say to anything that has to do with payments, to really create a cashless world in that way.
So, I mean, you're working, I mean, Cover Security, I mean, you're working globally with many different markets. Take, for example, Asia or Africa. Mm-hmm. When you meet, I mean, organizations and governments from those countries, what are their thoughts about digital identity? What kind of questions do they usually ask you at Cover?
Well, I think it's a lot about centralization. These countries, they want to centralize the data, they want to control the data, they don't want it to leave the country in any way. But as I mentioned a little bit there before as well, that, you know, working with individuals and the population itself, if a government is forcing the population will never adopt. If the population loves it, they will adopt it. And let the people themselves be the ones to identify themselves rather than the government identifying you. I think that's one of the keys as well.
Okay, that's super interesting.
So 1 billion people right now lack any physical form of identity. And it's a huge issue, of course, and there's a part there that is quite tricky to really identify them as well. If we look at the part of the population in the world that have some form, but not in this like digital trail, these are the people that we called also being unbanked. It's a huge part of the world. And then we have ourselves, of course, which is maybe not the majority, but that has that digital trail that I just talked about as well. So what all these three have in common is that, you know, they're part of the planet, but however, there is a need to really find this like ecosystem that works as a network to enable both the unidentified, but also the identified, but also the people that do have a digital trail. So, as I mentioned a little bit before, we have verifiable credentials today, and then we go over to the self-sovereignty. When will that happen? Is it 2030? Is it, well, in 5 years? Who knows? But it's really about looking to what's in between, because verifiable credentials can be pretty much a doctor going into your medical records, looking at your identity. He's maybe not an expert at looking at IDs, right? So what we want to approach and what we want to head towards as this big buzzword is, of course, self-sovereignty and decentralization. But if you look at self-sovereignty and decentralization, then you're going to work more towards building thousands of wallets. All these different businesses worldwide will have to choose between 1,000 different wallets of your digital identity. So the question is, what should they choose in that way? So really, the aim that we started working on in the Stealth project around 2.5 years ago was really to take this to a global scale and do this in a completely different manner. So our solution to this is IAM, as we call it. It's the borderless identity. And IAM is really built as a network. So imagine exactly how you work with Visa, MasterCard, Amex, or whoever is the payment processor and the payment provider today. You know, transporting pretty much payments is exactly the same manner as we do when it comes to digital identity. And this type of network is going to enable more than 500 million issued digital identities before 2025. We're looking at around 30 countries. We're working with central banks, governments around the world right now to really help them drive this. And it's everything from state banks to smaller banks to neobanks and everything like that. So it's also going to be available over 4 continents. We're looking at Africa, we're looking at Europe, we're looking at Asia, of course. Throughout the Middle East as well, of course, to not forget anything. But we're not looking across the waters toward the US and Latin America just yet. The reason for that being is a lot of different regulation, but that will come. And in the near future here, there's going to be more than 1 million services connected to this platform. So it's about claiming your digital identity, being able to reuse this cross-border at any time. So imagine the process that is within banks today when it comes to opening up a bank account. You open up the bank account, you go through an identity verification process, either physically or by using an identity card and biometrics. So once you've done that, you want to open up a savings account. You want to apply for a mortgage. You want to put up a credit card. You have to go through that process again. And that's a big issue for banks. It's a big issue for the individual as well. So there's a huge drop-off rate within the industry of identification. It's around 40%. 40% of the people that go through an ID verification process drop out because they don't have their passport on them, they don't have their driver's license on them, they just drop out because it's a hassle, pretty much. So we really take control of our own identity. It's not about educating the people anymore, about taking control of their data and all those different buzzwords around back in the days. It's more about taking control of the identity and the digital trail that goes throughout that. So that's really how we imagine the future of becoming borderless. And if you need more information of what we've done history-wise throughout the bank ID and what we're working on right now, just scan the code that has been through the presentation as well. So I think that's about it when it comes to how we should become cashless, actually. Perfect. Thanks.
All right. Thank you very much. Tom, we see you tomorrow afternoon, if I'm well informed, at the Mastermind Summit to discuss the role of accelerator networks for fintechs. Thank you.
See you later.
All right. Bye-bye.
Bye.
Now we're going to have a very short advertising break by Salesforce. We'll be back in 2 minutes.
Putting the customer at the center of everything we do is the new mantra within our organization.
We want to make experiences as frictionless and seamless as possible.
And we still want to make sure that people feel the human aspect of our business.
You don't want a customer to know that you're a series of different departments. They want to know that they're talking to T-Mobile.
Salesforce enables our colleagues to do what they do best, which is build that relationship with our customers.
The beauty of the Salesforce platform is it gives us a 360-degree view of our customer.
When you're on a single system, everybody in the company can have a single view into the customer lifecycle.
You can really create an amazing end-to-end journey.
It's smart integration. Our rate of innovation has increased with the Salesforce platform because we're able to try things new very quickly, and if they don't work, then we go back to the drawing board.
We have the ability to change direction if we need to, because there's data there that is real time.
And then we move to the predictive insights, and that's what we need to run our business.
So right now, we can actually get the true power of being a global company by using Salesforce technology. It's, super exciting.
The fact that we have one system rolled out globally is enabling us to innovate and execute in a way that we never could have done before.
Salesforce ci ha trasmesso una sicurezza che i dati dei nostri stimabili e amabili clienti vengano in qualche maniera rispettati.
Salesforce has been a guiding light, showing us what is possible when you platform everything around the customer.
For our next speaker, that will be Christophe Uzu. He is a Gartner Research Vice President and also HBR author. In his responsibility, he advises banks on their digital financial strategies and how to develop digital financial services ecosystems. He will highlight the topic of the real use case of blockchain, how leaders can create value in a new digital age. And we welcome him remotely. I see him on screen already, which is great. Christophe, the floor is yours.
Good morning.
Good morning.
Welcome. Okay, excellent. Let me share some slide, if it works. Oh. Okay, I assume you can all see my slide now. So welcome to this session on the programmable economy, which is my way to explore how blockchain, the real business of blockchain, could contribute to a cashless society. So what I want to do in the next 15 minutes is to demonstrate that in order for blockchain to make a meaningful contribution to the cashless society, we need to think about a new types of economy, the so-called programmable economy. And before I get into the details, I would like first to speak about like football, a beautiful game. We, of course, haven't enjoyed as much football as we expected in the last few months, but as yourself in Europe, you have been able to enjoy, you have been able to, some of you attend the Euro 2020 or 2021 and enjoy your team playing. Or at least from my perspective being French, not enjoy them as long as I expected. But what you may not be aware of is in some venue, like Wembley, more than 95% of the tickets were actually supported by a mobile app solution, which was itself supported by blockchain technology. It created a way to actually improve the flexibility of issuing the tickets. It had some benefits of dealing with multiple venues. So you could actually issue the tickets more like last minute, so to speak. And you could also improve traceability, an important contribution of blockchain. But beyond that, what was very interesting is we started to see some introduction of some level of programmability. The ability to define, for example, when the fans could get in the stadium, 1 hour before, 2 hours before, and so on. Taking into account different types of fans, different teams, and so on. So crowd management was important as part of the solution. It also created a way to deal with fraud and to try to better understand what are the fraud patterns, depending are we in the quarterfinal, semi-final, and so on. So programmability had some impact on the operational efficiency. And it also created a new way to engage with fans, to start to provide them with more advice, especially from a health perspective. So we start to see that level of programmability, both from a consumption perspective, the football ticket itself, as well as how we actually engage with the fans. And the football as well has created new ways to rethink how blockchain could be used to create new financing models. You may have seen some company such as Sorare. They have developed platform where you actually can create a kind of a new types of like fantasy football, where you're actually acquiring some new like cards which take the shape of non-fungible tokens, so unique tokens representing some players, or not that unique if you are like Angel Di Maria as example on this slide, but very unique if you're Luis Suarez to that extent. But the point was very much to enable more engagement with the fans, but the fans have become more like investors. And you could argue that the next step could be for using that type of new platform, marketplace, as a way actually to support investment into players and supporting their careers. So you can see that as we see the evolution of a beautiful game as a kind of a illustration of how society evolved to a certain extent, we can see that injecting probability increase participation, increase engagement. And that's something we think is very important as we look to the future of the cashless society. Now, let's take a little step back. This is our definition of blockchain in a very generic fashion. But the key point here is to have real blockchain, we really need 5 core components. We need distribution, so all the different nodes, participants of the network to have the same version of the truth. We need encryption, of course. We need immutability, which is very important, actually linked to traceability and all the different services we've seen in the supply chain domain. But most importantly, we need a combination of tokenization and decentralizations. We need a new way to create new types of way to exchange value, new value, and we need to enable more participation on the governance model supporting those exchanges. And it's fair to say that, if I may use pen here, it's fair to say that today a lot of the solutions tend to limit themselves to those 3 components. And for us, the real transformation of blockchain is that combination of tokenization and decentralizations. And that's why non-fungible tokens, which are not the only use case for blockchain, for sure, are important to actually bring us closer to that concept of a programmable economy. So, what does it mean? Well, we came with a definition here to better understand what we are dealing with. We see this very much like, as I mentioned here, an intelligent economic system. What it means is very much we'll have new economic agents, for example, machine customers, that can act on behalf of customers, just like yourself, on behalf of enterprise, and also deal with other machine customers, also in an autonomous fashion. So we'll see new way to exchange value, new way to actually make transition towards a cashless society. We will see also new requirements. We will need to accept some more decentralizations. It doesn't mean that everything will have to be decentralized. We have to accept that if we want to improve efficiency, if we want to accept new economic model, we have to accept to empower all the different economic agents. And finally, we'll have to think in terms both of monetary and non-monetary exchanges. That's where the concept of digital assets is going to be so important. And you have session this afternoon on digital assets, so I strongly advise to attend those. So we have this broad definition. We see this as very important in the development of blockchain, also because the alternative is not as good. If it's not programmable, it becomes programmed. And program means other actors will define how you're supposed to interact, how you're supposed to consume. And that could clearly be digital giants. That could also be governments. The problem here is you don't really have a cashless society as just cashless interactions. So programmable for us is a way to actually activate the value of blockchain as well as create new types of economy and value. Now, let's look at this in more details. So let's use a very simple model to illustrate what we're really talking about here. So we are illustrating here, let me use my pen again. We take into account different types of agents, so company, institution, governments, as well as customers and or important machine customers that can act on behalf of customers, but also can act autonomously. We are very interested in the different level of programmability. Very importantly, we're interested in programmability from the perspective of money as well as data. And that's where we look at digital assets. We're not only talking about moving existing types of value. We're also looking to create new types of value that need new exchange mechanism as well as settlement mechanism. We're also going to look at a model where we look at functionality, so something you or someone else would like to actually do as part of a product in a given industry linked to an ecosystem. So let me illustrate with a simple, here you go. So let's assume you are entering with your vehicle, entering a smart city, and for the most unlucky of you, you may have to pay a concession charge. For others, it's just a matter of identifications to benefit from different services. By doing this, already there's some level of negotiation from an ID perspective, or you have to pay your entry fee, so to speak. You're going to rely on the machine customers here. And here you can see that already for very simple tasks, finding a parking space, paying for that parking space, maybe charging your vehicle, assuming it's electric, and so on. Also, maybe you want to exchange some electricity, that's some P2P mechanism. As you can see, you need some negotiation mechanism, you need new ways to exchange value. You need a higher level of programmability. But programmability starts to become even more important. We have to deal with new context. That could be, and I'm not suggesting it's the case today, related to a more dynamic real-time tax policy, which has all set of issues, but from a local perspective, there are some experiments on this. And most interestingly for us, in terms of how this digital assistant will make decisions on your behalf. So we need new way to exchange data, to define the consent of your data, and to find a way to set up the exchange of those data. And those data could take the shape of data tokens. If we make that example a little bit more complete, we also take into account all the exchanges of data happening among car manufacturers. Car manufacturers are working together to create so-called decentralized federated machine learning, leveraging blockchain technology in order to be in a position to actually share data, to actually move to the next generation of autonomous vehicles and be able to compete against Alphabet, Google. And again, this is not just like the specific context of data. This goes back to the cashless society. This is how you're going to define new ways to actually apply for an insurance policy, a credit line, and different types of retail services. So a cashless society has to be programmable and has to account for programmability of money and data as two broad categories. This is not only exchanges extending from what we have today. We also have to pay attention to the next generations of universe or environments. You probably have heard about the concept of metaverses. I mean, clearly, Facebook has said we're going to become a metaverse company and so on and so on. But there are other candidates which would argue are a bit more decentralized and provide more flexibility for economic agents to express themselves and carry out new types of transactions. Roblox is an interesting gaming platform, and it's not a significant one. When you look at Robux, which is, I'm stressing here, which is their, let me tick those for clarity, which is their like a digital currency, they have generated or been used for $652 million US. It's quite still significant. And 42 million users every day. That's a pretty good engagement. What is more interesting, actually, is that a lot of the users are using Roblox as a platform for exchange, and also are using the activity in Roblox and outside Roblox to create new digital assets, such as non-fungible token based on the experience. So early days, but the emergence of new consumption model is very important to pay attention to when we think about the use of blockchain technology. And we need programmability here. On the right, this is an illustration from Decentraland, which is quite decentralized, as its name suggests. This is supported by Ether. And it's, again, it's not insignificant. There's not as many interaction as Roblox to that extent, but there are a lot more investments. But today, they have their own digital currency, so they're acting a bit like central banks inside the Decentraland world. And it's represented at this morning $1.5 billion US. It tends to change to a certain extent. But what interestingly is on that actually like environment, you can not only sell, exchange your non-fungible tokens, being art, gaming items, and so on. They even have a museum district. You can see from that picture here, Atari even created some sneakers they can sell and you can wear in that world. But also, you can actually buy land, and some land has been sold for $1 million US, as illustrated on that slide. So you can buy some lands, actually use it to create and combine, create new investment products. You can combine this with NFTs linked to art, and you can create new types of digital asset as well. The important thing here, this is starting to impact the real world as well, as illustrated by Roblox and how customers use this as an exchange mechanism outside of the platform. So this very much like illustrates some of the importance of thinking about programmability and thinking about existing consumption pattern, existing exchange from monetary and data perspective. And we went through examples of sport, we went through examples linked to property, and I just wanted to share that slide to illustrate all the different steps that could be involved. Because clearly that suggests that we're not talking about blockchain on its own here. What we are talking about is a combination of blockchain, IoT, AI, and decentralized self-sovereign ID, which is in itself are supported by blockchain. But the idea here is you have an ability to create that level of programmability that I keep talking about, but also you do it in a way that no single entity is able to program the full value chains. If you become programmed, we lose the ability to create new economic value. So, taking this talk into account, a few observations to finish this session. And I think you have lunch after, so definitely don't want to be between yourself and lunch. We have some key assumptions, which are in fact our needs more than assumptions. We see the need for increased level of programmability becoming more and more important. But it is especially important that we see the emergence of machine customers. Another important requirement is clearly you've seen the evolution both on cryptocurrencies, stablecoins, and central bank digital currencies, Cbdcs, to really generate value. They're going to have to encompass that concept of probability. If they just support existing exchanges, what we have may not be perfect, but it's good enough in a lot of cases. If you can launch, for example, a central bank digital currency, Cbdc, that can accommodate new level of programmability, be more flexible and so on, in that case, you may have a business case. We really need this to happen to that extent. And the last bullet is also a segue into some session for this afternoon, that new ways to actually digitalize data, improve exchange of data, and link to monetary value, create new ways to create digital assets. And those digital assets are going to be fundamental to increase participation in the economy, of course, but also to create new financing model, such as decentralized finance, in order to support the growth of that economy. So that's for my talk for this morning, afternoon. And if I'm correct on the agenda, I want to wish you a very nice lunch and a very nice rest of the conference. Thank you very much.
I thank you, Christophe. It was indeed a very good presentation, a lot for food for thought for our lunch break that will start right now. I think during this morning, we had a very good overview of where we're going to, and maybe Cashless Society is not for the first 5 years yet, but I think we heard a lot of information, first on the challenges, but also the opportunities, what things we need to consider if you want to drive society towards cashless. We got a lot of very new, novel technologies from Israel up to here, Luxembourg and the continent. So again, as I said, a lot of food for thought. And we'll continue that in the afternoon with the sessions that will focus on FinTech and the KYC challenge. Enjoy your lunch break, and don't forget to take time to explore the exhibition area for the people here in the room. And the people in digital room, we look forward to welcome you again in the afternoon around 2. Thank you very much.